Hi, my name is Nick Nassad. Welcome to CMS Forex News. Today's Tuesday, June 17, 2008. The ZEW indicator of economic sentiment for Germany dropped significantly in June. The indicator decreased by 11 points and now stands at minus 52.4. Orders are decreasing for German goods, indicating that Germany's momentum will lose steam in the next 6 months. Continuing price increases for energy and food are reducing the purchasing power of consumers, while loan conditions for companies is worsening as a result of the financial market crisis and the expected interest rate increase by the ECB. Housing starts in the U.S. fell 3.3% to an annual pace of 975,000 from a revised 1.008 million in April. The reading was below forecast and hit a new 17-year low. The housing market is dealing with excess supply as rising foreclosures, higher mortgage rates, and declining property values create a glut of unsold homes. A reduction in housing starts may help to stabilize prices, as extra supply in the form of new construction would only add to this extra supply. Building permits were down 1.3%, a sign that future construction will be weaker as well. Lower starts, however, will cause the hard times in the construction sector to continue and will impact GDP in a negative way. Starts have dropped 32% since May 2007 and has been one of the major drags on growth in the U.S. economy. Industrial production in the U.S. fell 0.2%, the second month in a row output shrank, and the third month out of the last 4 where production has declined. Capacity utilization, a proportion of plants in use, fell to 79.4%. Producer price inflation grew 1.4% in May, the fastest pace in 6 months. The overall index was pushed up by food and energy prices. Without these volatile items, PPI rose 0.2% on the month and 3% on the year. The core data is manageable, but soaring energy and food prices are what consumers hear about and what will impact their spending going forward. The U.S. releases today undercut speculation of an interest rate increase during the summer from the Fed. With housing weaker, it will take a serious deterioration in inflation for the Fed to act. The euro-dollar pair traded in a range, with the dollar gaining following the European release, then falling in New York trading after the U.S. releases. UK consumer inflation came in at an annual rate of 3.3%, prompting the Bank of England Governor Mervyn King to write an explanatory letter to the government. In the letter, King said price rises stemmed largely from surging commodity prices and would likely prove temporary, which was a less hawkish stance than traders expected. The pound reversed earlier gains and fell more than 200 pips from an intraday high near 1.97 against the dollar. The pair found support near 1.9470 around 8 a.m. and rallied 95 pips by 1:30 p.m. Eastern. In the European session, the euro gained on the weakening pound. The euro hit an intraday low following its ZEW indicator, but then rallied 80 pips to test 0.7950. From here, just like the pound-dollar pair, this pair's gains were pared down. Overnight, Australia will release the WMI leading index, Germany will post import price index, and Switzerland will release its ZEW expectations. The UK will reveal its meeting minutes and CBI industrial trend orders. Tomorrow morning, Canada releases its leading indicator. And that's it for today's recap. Thank you for joining us here at CMSFX.com, and happy trading.